All right, we've got a nice chunky panel to discuss this very complex and interesting issue. I'm sure there'll be lots of tips at the end of this, so take notes. Okay? So I'm going to direct questions to all of you individually, and then I'm hoping in the first answer, you'll just tell us a little bit about yourself as well. And remember, you can ask questions too. Go to slido.com and put in the code space25. Someone told me that the Slido wasn't working for one of the sessions earlier this morning, so hopefully it's working now. It definitely was for the last session where we did get some questions, but it's always great to have questions from you in these sessions as well. Okay, so I'm going to start with Jim Adler, founder and general partner at Toyota Ventures. Jim, we're a space conference. I'm curious to know, what is Toyota Ventures doing in space?
That's a very good question, Alok. So Toyota, I think many of you know about Toyota and the vehicles that we put on your roads. But what's next for Toyota? And we think that space mobility, air mobility, is certainly in Toyota's future. I think if you look at the space industry, we are going to, and you heard it this morning from Kiko and from Andy, that we're going to see a tremendous volume increase in satellite volume and launch volume in the next decade. Well, who's going to make all those satellites, and who's going to make all those vehicles, those launch vehicles? Early in my career, I was in the aerospace industry, lived in Seattle for a while. And a great year, the aircraft industry makes about 1,000 vehicles in a great year. Toyota makes 1,000 vehicles in 10 minutes. And
how long? 10 minutes?
10 minutes, we make 1,000 vehicles, as many as Boeing makes in a year. And with the safety, durability, reliability, and quality that Toyota brings to these vehicles, we think that kind of expertise will be incredibly well suited in the space industry as well as the aircraft industry. And you will soon see actually the Toyota logo in space. And we're excited about that.
So is it manufacturing expertise and efficiency that you're bringing that perhaps other companies or venture teams can't?
Well, I think I'm a big believer that you cannot centrally plan disruptive innovation. It's startups that are running experiments in the marketplace that are going to figure this out. There's no one that's going to decree what the future will be. We have ideas, we have theories, but it's the startups that are willing to take big chances and take big swings. And by aligning with them, and we really tried to align with some of the best teams. You talked to Andy Lapsa this morning. We're an investor in Stoke Space. Those are the folks that are going to define the future. And we want to align with them, and we will certainly celebrate their successes, but we'll also learn from the lessons that they learn in the brutal marketplace where they are operating.
Matt O'Connell, let me bring you in.
I had a question for you. Do you care more about the learning or the return?
Well, I think that's a false choice, Matt, because I think the learning is a prerequisite for financial return.
Matt, since you've taken the floor, let me ask you the next question. You've been involved in innovation in space for some time. How have you seen innovation in this sector change in the time that you've been in the industry? What was it like in the early days compared to now?
Well, there's a lot of new technology, and that has increased the pace. I was talking to a couple of UCF students this morning, and I said it's a great time to be in the business because satellite builds used to take, even for a LEO satellite like I had, that was a 4-year endeavor. And now it can be less than a year. And so people are iterating faster and trying things faster. Also, the success of some of the space early guys, you can tell by my hair, I was an early guy. I think we were probably the first company that had been started in 20 years to sell for over $1 billion. And that brought new capital into the industry. And that new capital in the form of smart guys like Jim helps you move faster and try new things. the only thing I worry about is sometimes I worry that there's too much capital and people aren't vetting the ideas enough. But, that happens. I think that we have almost an embarrassment of riches right now.
Maybe we can dig into that in a moment. But let me bring some of the others in. Kelly, let's talk about your time in the industry as well. You've been investing in space, innovating in space as well for some time. How has things changed? Do you agree with what Matt says there about the energy sort of increasing?
Sure. So my start into space was about 10 years ago. I was an angel investor in a space company when back then the private industry was just not, it was Elon, Planet, and not many others. And then I was a colleague of Matt's at DCVC for a while. Then I launched the NATO Innovation Fund, where we invested in a number of space-based types of applications. So including launch, space-based manufacturing, and also including supply chain for space. So how to make spacecraft lighter with composites and streamlining the supply chain, which I think is critical for the industry to continue moving. So lots of interest in space over the years. And I see very much the trend of there's no one else there. There's so many people there. And then now the next phase of discovering who are the people who are creating the real value propositions that'll last.
Interesting. Josie, can I bring you in? You're the founder and chief executive of Relm Insurance. We've been hearing from investors here. Where does the insurance world fit into this? What do you do now that allows all of this to happen?
Yeah, I think it's a great question, because I think venture capital in a lot of respects drives and fuels ambition, and we view the role of insurance as ensuring that ambition survives its first contact with reality. And when you look at perhaps all of the capital that may be available to initiate and drive that ambition, I think our perspective, and I think a lot of people would agree, that you can't scale the next version of space without insurance and risk transfer and risk management. And so really our proposition is a specialty insurance company retaining a lot of risk on our own balance sheet with a core focus on supporting the entire supply chain into orbit and back down to Earth, is really viewing insurance through the lens, not as a seatbelt, right, which kind of gives a restrictive connotation, but more of an enabling and stabilizing force for innovation.
So turning something that's just an ambition or an idea into something that can become a business one day requires this sort of de-risking, essentially.
100%. And I think, Matt, you made this point, is that, maybe there's too much capital in the space. Who's really vetting and building, a source of credibility around a lot of these opportunities? And, we view that as a role that we can play in the evolving space economy. We're not just insuring rockets and satellites, which of course we insure. We're really underwriting business models, everything from the cap table to the investor deck to the cash runway and the technology and counterparty due diligence. So it's really a very holistic approach that we take to ensure that the type of capital we're bringing into the space economy also comes with an element of credibility and signaling to counterparties and investors in the market.
Just a quick follow-up. Are new space companies inherently more risky than traditional other industries?
I mean, talk to any insurer or reinsurer who's been insuring traditional space over the last 20 or 30 years. I think losses have either equaled premium inflows or perhaps exceeded. I think it comes down to the merits and facts and circumstances of each account. We've insured companies that are just launching their first satellite in very low Earth orbit, right? New technology and propulsion to deal with atmospheric drag. Most insurers wouldn't want to touch that for a variety of reasons. Those are the things that we lean hard into.
Interesting. Ed, you're a senior investment partner at the UK National Security Strategic Investment Fund, which is a mouthful.
It is a mouthful.
Let's say out loud. Could you tell us what that is? Can you introduce what that is?
Yeah.
And then I have a follow-up question, which is, why is it important to have more than just VCs funding these things? Why is it important to diversify the funding for this industry if it's really going to go forward?
Yeah, so the National Security Strategic Investment Fund is very much a mouthful, as you identified, Alok, so please call us NSSIF. We're the corporate venture capital arm of National Security and Defence in the UK. Very broadly speaking, we're the UK equivalent to Incutel, which will be a more familiar name to this audience. We exist primarily to give a strategic technology-driven advantage to defence and intelligence operators in the UK. And the question was, what was the question, Alok? Remind me.
What's the importance of having multiple types of funding when it comes to building an economy like this?
Yeah, I guess we spend a lot of time looking at the cap table when we invest in new companies, and we do definitely look for a diversity of kinds of capital in there. I think something that a body like NSSIF or Incutel can do, which is unique, and organizations like Jim's as well as a corporate venture investor, is that we're basically a huge multiplier on your BD front. We are expected by our sponsors, our corporate parents, to deliver strategic value for them. So alongside the investing, we are pushing investee companies into opportunities with the parents, and especially in the realm of dual use, national security, which so much in space relates to. There's a real appetite amongst those customers to be first, to be there, deploying the technology, using it before adversaries do. And there's a route in that to getting customer feedback that, there's gold dust customer feedback super early before other people. So that's what corporate investors can do for you.
Yeah. Kelly, can I ask you for some specifics about the kinds of companies that are most intriguing to you? To give us a flavor of what new space is, what kinds of companies are there? What have you seen that's impressed or amazed you about this era of space economy and space flight?
So we've seen a lot of launch and EO over the past, let's call it, many years. And something interesting, Joe just mentioned VLEO, which is one of the latest companies that we had done at the NATO Innovation Fund. So companies that are kind of breaking out from the traditional two buckets or the traditional, not LEO, MEO, GEO. So thinking about what are the new use cases from here, besides piling on to the former use cases that have grown and have become quite crowded. So it's very early days, but some companies are working on data centers and compute in orbit, energy in orbit. There's in-space manufacturing for pharma, for semiconductors. So it's early days of proof point, but it's yet to be seen whether economics will become valuable for customers.
All of those examples you said, I'm sure we'll talk about in other sessions of this meeting, and there's people here probably representing this industry. I'm just curious, just as a quick follow-up to you, which one of those is the most sort of impressive or interesting or intriguing to you, even if it's like far away from being practical? Which one do you sort of think, this is cute, this is nice?
So we ignore unit economics, because none of them are close.
Yeah, we're not back.
Not yet.
Not yet.
Forget about the title.
Data centers would be really interesting. I mean, we're going to need it, whether it's on land or in space. And if we can get that, especially with the cooling element in space, and we can make it economical, that would be really tremendous.
Data centers in space. Interesting. You heard it here first. And Jim, again, for you mentioned manufacturing as obviously one of Toyota's main expertises and being able to build things here that can go into space. But what are the other sort of frontiers that your teams are sort of looking at?
Yeah, so I started my career in electrical engineering, and the first, half dozen years of my career was spent in the space industry, launching rockets for what's now Lockheed Martin. And at the time, it was about $5,000-$6,000 a kilogram to LEO. Now, I don't have as much gray hair as Matt, but I got quite a bit. And it's still $5,000 or $6,000 per kilogram to orbit, to low Earth orbit. And so we have been I've always been intrigued by how do we get not just the cost down, but the launch rate up, which actually they walk together. And soon as that happens, then you start to break through a ton of applications. Tow trucks in space and new GPS services and internet from space and manufacturing, of course, and power generation in space, I think, is going to be huge. But you can't get there unless you can get that damn door open to, as Andy said this morning, touching the economy more than 200 times a year. And so that's what I'm really excited about, especially in a venture term. I mean, we're a GPLP structure, 800 million under management across 6 funds. We have to live within like a 10-year term. So is the moon ready, yet for venture returns? Is Mars? I think that's still a little further out. I think there's infrastructure to build, and we are really excited to build it and see this economy really grow, and Toyota will be a part of it.
Is Toyota going to start building rockets at some point?
Is what?
Is Toyota going to start building rockets at some point?
Well, I'm not here to announce any news, but
Speculate, right?
But look, I think that our job is to align with the best teams on the planet and align with them financially, and those financial winners will be strategic to Toyota. That is our thesis. And we should look like a financial venture firm to any startup. That's how we're going to align and partner with the best startups on the planet. And they're going to define the future.
You'll notice that Jim didn't say no. Matt, you raised this point earlier about there being so much money, lots of money. Are you suggesting this is a bubble?
No, I don't think it's a bubble. I think it's a rising tide. I grew up doing M&A on Wall Street, and there was an old joke on Wall Street, which was, if you have a dog, put it together with other dogs and sell it as a kennel. I took 3 broken companies that were losing money and combined them and sold it for $1 billion 10 years later. So not all the new companies are going to win. Some are going to win, some are going to lose. I've been listening to my colleagues here and thinking, well, what do we all care about the most? I generally go by TAM, total addressable market, and then tech and team. Team is important. Jim was just talking about aligning with the smartest teams. Old school venture, they said, bet the jockey, not the horse. These days, there's a lot of talent, so you can swap people out, but I think it's important to have all 3. You've got to start with TAM. I mean, I should thank the Economist for having us here, because this is a great event. It's fun to get everybody together. And also our sponsor is Joe's company, Relm. But you look at Relm, space insurance, huge TAM. It's just people haven't gotten it right. Well, if somebody gets it right, I think it's going to be good for the insurance company, but also good for those of us who are investors in space. And you have to have that combination of TAM, tech, and team. And that's not easy to get that trifecta together. And then you get guys like Joe and I who have been operators for a long time. And I spend a lot of time trying to create value with our companies. And I think that's hugely important too. We all have a lot of expertise up here, and adding that expertise to people, helping them think, helping them see around the corner, I think that's really important. So I don't think it's a bubble. I think certain areas, this is a slightly partisan statement. We were some of the early money in Rocket Lab. I sometimes think launch is kind of overinvested, but I don't have a crystal ball. I just think there's a lot of dough going at it. Kelly was talking about finding the niche things that are going to be critical. Larry Page has a great statement, invent the next toothbrush. People have to use it twice a day. So I don't think it's a bubble. I think there may be some disappointments, but I think people are going to make a ton of money.
Yeah, I guess the thing about launches, even if it's overinvested, people want more of it. So the demand seems to be there, right?
And hype isn't always bad. Hype brings in talent and capital. Yeah. You don't want to buy at the top, but sometimes you want the energy of a little bit of, I won't say bubble, but bubbly.
Look, Musk, Bezos, and Branson have added a lot to this industry, and so
Yeah.
The money is really wasted, right? I mean, it may be wasted to a single LP, but it accelerates the whole industry. When something goes wrong, it spills out talented people. The competition pushes the other companies further on. So,
And it does kind of, what it does is it seeds the industry. So like robotics 1.0 had a lot of failure in it, but it created a lot of talent that now is kind of critical mass for robotics 2.0 in the era of this new AI technology. And I think space has gone through many of these iterations, and the talent just gets better. And I think it was somebody this morning, it might have been Andy or Kiko, said the team has been around the block a few times or something to that effect. They've done this before. Maybe they failed last time, but they are now experienced and they are ready to reach further and be bolder.
And I think, building on that point, when people think of space, they're thinking of either launch vehicles or they're thinking of satellites. But today it's a supply chain consideration. I mean, Kelly talked about building efficiency in the supply chain. Well, right now the supply chain is one of the biggest vulnerabilities for consistent and predictable results, right? So I think when we view space as an opportunity from an insurance standpoint, it's a really holistic view, ranging from putting investors in a position to understand the source of financial recovery when these companies inevitably go bankrupt. It's considerations related to business continuity when you are missing launch windows. It's data security coming back down to earth. And so when you really look at it through that lens, I think it's going to need as much capital as we can bring to the table, and along with it, as much resilience in the form of risk management, risk transfer, and risk financing that we can provide.
Thank you. There's some questions in from the audience. Remember, you can submit questions on the Slido. Just tag it Space 2025. So I'm going to read out the question and then I'll see who'd like to take one. There's a question from anonymous, it says. Okay. Do you see specific opportunities outside the US, such as in Europe, where there are efforts to increase space and defense spending? I feel like in the US, there's efforts to increase space funding as well. So what do you think, Ed?
Yeah, I'm happy to take that, having flown in from Europe yesterday. Look, there's incredible talent in Europe. The science is as good. The technologists are as good. The market isn't as good. It's fragmented. There aren't the massive sort of gravitational forces like Golden Dome or equivalent programs. And there isn't quite the same diversity of capital that is enjoyed in the US. But it costs a lot less, right, to build a business in Europe. A top talent is going to cost you probably 60% of what it will in the Valley. So absolutely, yes, there are opportunities to build great businesses, especially the earlier stages, in a very capital efficient manner in Europe.
Kelly, I wonder if you had any thoughts on this too, given your background in this as well. What are the differences between Europe and the US that you see, where you see opportunities arising across the pond?
Yeah, and I saw this firsthand, having lived in Silicon Valley and invested out there for many years. And less than 2 years ago, I moved to London to invest in the European deep tech ecosystem. And I can say that the pockets of opportunity in Europe, the research, the talent are definitely there. And there are niches that you don't often see in the US. As in, if you look for deep tech, you're looking for best in the world, and you're looking for a certain research or innovation, and that's going to be one of a kind. And I'm seeing a lot of that in Europe. And thus, when we're thinking about where are the pockets of opportunity, there are a ton of investable types of companies. They're not as large yet as in the US. The growth is not as fast yet as in the US. But I think it's a place that we need to be spending a lot more time nurturing the founders there, because a lot of this is very unique and it's only happening in Europe.
Can you give an example of what a niche technology? I'm interested to know what Europe is doing that perhaps there isn't so much of in this country. And then you come in.
So for example, and if we're not just talking about space, but talking about deep tech overall, a fundamental innovation, say in the semiconductor space, one company building something that could disrupt all of the semiconductor manufacturing process. And I've seen one of those in Europe, and it's something that US investors realize, okay, now that I've seen US and Europe, this is the only company in the world that can serve this space. And it's because of IP coming out of one university that is going to change that space.
That's interesting.
And there's a lot of these kinds of examples.
Yeah, and I agree. I mean, we've recently supported a company with insurance products that is in its first 5 launches using methane and liquid oxygen, right? You talk about this idea of needing to increase the velocity and frequency of launches. I mean, this company, potentially is on the path to executing in a more efficient and reasonable way. And Kelly mentions, these are the types of companies we need to be supporting, and that support again comes through a variety of different forms, whether it's commercial support or whether it's capital support or obviously in our case insurance support.
We've got a few minutes left for this session ends, and I wanted to ask all of you a question just to end. People who have investment get people pitching to them, of course. I'm curious if you could share maybe a tip on how a space startup, should pitch to you, and if there's a mistake you always see that you wish they wouldn't make. Maybe I can start at that end with Ed.
I'd say always tell your story. Too many pitches, they begin with, oh, you know about space. Let's cut to the nitty gritty. But it's so hard to lose your way. So always tell the story. And I think I really look for companies that have thought about their roadmap really carefully. Space is a learning game. It's a practical game. It's not an academic one. You have to have a roadmap that facilitates regular hitting of milestones and regular drum beats of opportunities to learn, which is probably the SpaceX lesson, right? I think that's what SpaceX more than anyone has taught space. So those are the 2 things I would point out.
I'm going to amplify what he said. We are called venture capitalists, and I'm a card-carrying capitalist. You have to tell us pretty early how we're going to make money. People can sometimes go on about their tech way too long. So I have good tech, we have a great team, and it's going to produce this amount of money because the TAM is awesome. And if I get 1% of the TAM, I'm still going to do X amount. So get pretty early to the fact that we're going to get a great return on our capital. The way venture works is 3 lose money, 3 break even, 3 make a little money, and you have a fund returner.
If you're lucky.
Well, if you're lucky. So we know we're going to lose money on some, but pretty early get to telling us why we should take the pension fund of the University of Central Florida and invest it in your company.
Yes, for sure. But especially in a industry that's relatively nascent, and I still believe that space is relatively nascent. And although it is hitting an inflection point, it really comes down to the tenacity of the team. And I always look for a couple important characteristics. One is, they got to be able to tell a story, as Ed said, and not just to the investors, to their team, to customers. Storytelling is really underrated, but yet that is why the human species is at the top of the food chain, is the stories we tell, as Bill Murray taught us in Stripes, I think. The second thing is the tenacity. I want a team that is, and especially a founder that has something to prove. Prove to themselves, prove to their parents. Deep insecurities are often helpful because as Mike Tyson said, no plan survives a punch in the face, and every startup gets punched in the face repeatedly. And I want founders and team members that take it in stride, get back up, and bring all their creativity, positivity, and tenacity to the next time they're going to stand up and get knocked down.
Thank you. Kelly?
Absolutely, to all 3. I'll go with the other side, which is a common mistake that I see, and it's conflating technical risk with business risk. So founders coming in and saying, look, we've de-risked the company, we've shown that this technological thing works, and thus we will be cheaper than the next best. But then when you think about when they're scaling, it's how will they win customers? Yes, they're cheaper, but will this company at this early stage be able to have the same supply chain costs? And also, customers don't only care about cheaper, especially in critical areas like space. Reliability is huge. Pace of, like, for example, scale is huge. You guys are a small company. You're going to start off very small. It's going to take you time to grow. So how will you get to the very end? And that's the answer is not just we've solved a technical thing.
Thank you. And Joseph, last words to you.
Sure. Yeah. And I think, building on that point, space and zero gravity can change physics, but it doesn't change liability, right? And this idea that the punch in the mouth is coming. And as a point of differentiation for a company that's looking to raise capital, if your future investors want to know when you're ultimately going to be in a revenue generating position, and they also are aware that the punch in the mouth is coming, what are you doing to position your company from a more sophisticated position on risk management and risk financing? It truly is a differentiator in a sea of people who are focused on capital, tech, and people. Your ability to demonstrate a level of sophistication around the way that you're insulating your investors from not losing money on your road to revenue generation is going to be really critical.
So a lot of punches in the mouth in this industry.
Hey, we're investors.
Be ready for that. That was the end of our panel. Thank you so much, everyone. That was fascinating. Thank you very much for all your insights.
Great.
Applause, please. Thank you, guys.